Alright, what's up YouTube? I am back once again. Sorry for not uploading the videos. Been studying for these midterms. So we're gonna get started straight into natural gas. Natural gas spiked on me. I was watching UGAZ. I typically don't watch those ETFs and try to price them in on my charts. I typically just watch the actual contract and then go off and then buy the ETF off of the contract. So the inventory came out extremely bullish, but everybody's worried about the natural gas inventories. But now it's back below 320. But before this spike, I was hoping that it's gonna come down just a little bit. And before I knew it, before I was gonna put my buy order in, the thing spiked very quickly, and I knew that I was in trouble. And that's when I knew that I was running out of plays. I started to miss out on plays just because I was watching. I was too busy watching instead of jumping into action because I was trying out a new strategy, and which I reveal later on in my next video. Being able to swing trade at certain times of day, but I'll get back into that in my other video. So being able to watch the natural gas inventories and being able to watch the oil inventories can make you a lot of money at the right time. So you want to be typically priced in once this thing starts selling off, because once it starts selling off, there's tend to be a pop in the price. And make sure you're always watching which time chart you have it on. I watch 5-day because I have to swing trade it, or I could watch 1 day and I could just day trade it watching the RSI. So these are things that you have to watch out for. And what I want you guys to remember is that when you see spikes like these, you get into the companies. If it's too volatile for you, make sure you buy the actual company instead of getting into, the ETF or, trying to swing trade this thing. So another thing, gold has been really tumbling. And I was saying that, gold was going to fill that price gap to 1270. And now it's filled that price gap to 1270. And now it's feeling a little toppish around 1270. So if it breaks out above this resistance level that we've seen, it might hit past 1280, and we might get back to 1300. Remember, if if you don't want to play the ETF, you can always get into the gold companies. If it's too volatile for you, you can always get into the gold companies, and they'll produce you a pretty good return. Long as gold is up, long as gold is up, pretty much. It doesn't matter how much gold is up, as long as gold is green, the company's going to be green across the board. And, depending on how strong gold is, that's how the company's returns are going to be that day. Okay, also we're going to get to the earnings. Earnings after hours will pretty much be able to set you some things on your watch list right now. I might watch eBay going into the open tomorrow, just off of the crazy price action that you've seen. From highs of 33, now it's down below $30. And this is, going off of earnings and also the conference call. So when you see a company report earnings, it's going to act like an EKG. It's going to be spiking all over the place and, hitting lows, crazy lows. And these are after hours. So if you can't after hours trade, I suggest you stay away from betting on a company unless you're 100% positive that it's going to be estimates and the guidance that the guidance is going to be strong for the rest of the year, because it could be very dangerous and you could find yourself into a situation where you're down 5% or substantially in this company, and it might take some months for this thing to get back up, and you just might have to cut your losses. Because the only way I make money is if a company is falling in price or I see something setting up. So I see eBay setting up past, it might get past 31 tomorrow, but depending on how the market reacts on the debate, that's where stocks are gonna go. Depending on who wins this debate tonight, if it seems like Hillary Clinton wins this debate, the stock market will be green. It might be a little overbought, but the stock market will be green, and everything will be green across the board, because the stock market likes Hillary Clinton as a presidential candidate, and it's already pricing it in because Clinton is more predictable and Trump is less predictable, which the stock market loves predictability. And this is what you need to understand before the presidential election, is that the stock market loves predictability. If the federal government does not raise rates in December, the stock market will be in trouble because everybody's been predicting that they're going to raise it, in December. So if they don't raise it, we're going to be in trouble. So coming back to earnings, make sure that you're reading up on companies. If they're coming out with pre-announcements, that's just to smooth the blow. So that way, when they report bad earnings, you might see the price drop a little bit, or the price might run up just because they gave them a heads up on how the company was doing beforehand, before they report it. And shareholders tend to like that because they like to get in at good prices. They like to get in good prices before earnings or after earnings. So if a company could come out and say, we did such and such, but we did really good with revenue, but our guidance looks a little weak towards the end of the year, that's letting you know this company stock is gonna, it's gonna tank. But if they say a pre-announcement, is gonna smooth the blow. So when the actual announcement on earnings, the company won't get hit as hard as it would if they did not announce this already. Remember this. They come out with pre-announcements to let you know how bad the company has been doing before earnings, so that way when you get the earnings report, the stock won't get hit hard. This is what companies do to smooth out the blow. Pay attention to everything that you see on CNBC or that you see in the market. Make sure you're taking watch lists as you see these companies drop in the valuation. Twitter almost lost $1 billion in market evaluation in 10 minutes just because of Salesforce dropping out of the race to buy it. Pay attention, keep these things on your watch list, so that way when you see an opportunity happening for you, you're jumping in it and you're capitalizing on that gain the next day or maybe the next minute. Take care, guys. I will be posting more videos.